Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily, the iChart Daily on X. And in today's video is not financial advice. I'm going to be giving you a window to my thought process on what I think potentially is playing out with AMD on the longer time frames. Some things stand out like a sore thumb, and I just wanted to show you. So, first things first, you could see here high, low, high, low, high. So if we just draw some simple trend lines of support and resistance, so you could see we broke above this trend line. You could see we do have divergences playing out on multiple indicators. And now what we need to do, cussies, is set an alert at the 226 level, right about here, right above your most recent high. Because if we were to come back into this trend, there's potential for, I would say, this to play out. Now, this is the monthly time frame. Let's start zooming in and see if there's anything that sticks out that might bring us back into the trend. And the first thing that I noticed, this is why you got to look at a chart, is there is a clear gap from the 200 down to the 171. Now, gaps usually get filled, especially on longer time frames. If this gap were to get filled, we come back into the trend. If we come back into the trend, what was used as previous support, right? If it's a break up, what was used as previous support will be used as current support. Same thing where if we were a fake out to the bottom and we were to go up back into the trend, what was used as resistance will be used as current resistance. So once again, we're here. So that's why I would definitely set an alert at this level here, notifying me when poo-poo hits the bed. Now, these are weekly, 2-week, 3-week, and monthly time frames. Just to give you a apples to apples comparison, the last time this played out, this took literally 306 days with a cool 63% correction. If we just take this same bar and go over here, this is a cool 50 to 65%, 64% correction over roughly, let's just say, 339 days to 426 days. So if anyone was to say, bro, there's no way AMD with news, I mean, all I'm saying is like 34 to potentially like 40%. And the reason why I say that, when you're looking for liquidity zones, always look at longer time frames just to see where the masses are buying. You could clearly see this is going to be a key level, that 156 down to this level here of the 141. And I like to use 3 levels, so I would even be doing 175, 156, 141. You're looking at getting AMD 26, 33, and 40% cheaper than where it is right now. And then at that point, you're looking for a correction to the upside. So now, what could you do to help you notify yourself that poo-poo's hitting the fan? Well, what I do with technical analysis, now that you have all the lines drawn out, I want to look at when the waves broke down, what happened on indicators, what happened on the RSI, where was the indicators, right? Section A, Section B. Where was the stochastic? Where were the moving averages, right? So right now, your moving averages, if we were to fall, let's just say, back to and have like a nice dead cat bounce, this one took 33 days to 62 days, right? This one took 61 days to 120 days, 30, 40%. And this one, if we fall back, I would say would line up with the top here, right here, 25%. To here, 166, 30% back to these moving averages, 90 to 100 and whatever it is days, depending on this, right? So now, you can't bet with the monthly, but you can look at it for clarity. We're extremely overbought compared to the moving averages, so now let's go to the 3-week. This is where the first longer time frame we see this gap, and that's never a good thing. But once again, it could take 3, 6, 9 weeks in order for it to happen, or it could take one, like it did here, one candle. So now what needs to happen? So the first line in the sand you could see here when the RSI broke below the 70 and went back to the 50, there was room to bleed. And as of right now, it's at the 69, just tiptoed its toes in. The next line in the sand that we need to see happen in order for the correction to happen is the stochastic RSI to break below, the stochastic RSI to break below the 80 line. As of right now, we're going to be continuing to the upside until that happens. So once again, I would set an alert on the stochastic. I would say right about here, the 80 right here, set alert. Once it breaks down, you know we're breaking down. As of right now, we still have 8 days, 5 hours just for this one candle to print. And I just want to let you know that tops could take 70 days to play out, and you just stay sideways, allowing your indicators to show more bearish and hidden bearish divergence. We zoom into the 2-week. 2-week, once again, bouncing the stochastic RSI, bouncing above the 80 line, showing us that we had a continuation to the upside. We want to see, are we going to make the first lower high, break below the 80? Is the 2-week about to break below the 70? We zoom into the weekly. You want to see, does the weekly start to death cross? Does the weekly break below the 70? Does the weekly stochastic RSI break below the 80 line? Those are the shorter time frames that I need to see, because once again, there is a gap from 200 down to, I would say, here is your first level, 178, and to officially fill it's 172. This will get filled eventually. We're just trying to see when does it. Does it top like this and form, you know, this lower high, something like this? Once again, this took 50 days of forming that. This one was just a straight line down. We need to see. You could continue going into the 5-day, the 4-day, the 3-day. So you can see the 2-day breaking down exactly what I'm talking about, right? You could see the 2-day death crossing now below the 70 and below the moving averages. That's bearish and bearish. Stochastic not only breaking the 80 but now heading towards the 50. So the 2-day is the first time frame showing you the breakdown happening. If we were to turn on the 11 and 21 day moving average, if we were to break one, lining up the moving average with previous resistance around this 236 to 240 level, that's when we head down to the next moving average here to here. And then you go to your 3-day, and then you line up your moving average with liquidity levels here. And if we were to break here, then we were to go here. And then you go to your 4-day. And if we were to break these levels here, then we go here, and you continue to the longer time frame. So once again, the 2-day seems like the one that is happening right now. As you can see, the stock is down almost 7% for the day. That's really the video. Once again, I will draw the trend lines and show you the percentages that I am noticing, and I trust charts over people. So when I see support, support, and then I see resistance, resistance, yes, this is a breakout, but you clearly want to make sure you stay above this level, right? And we want to see, do we go up and form like a nice sideways channel and then eventually break to the downside? And the reason why I said that was because of everything in the video. If you're looking for the latest and greatest technical analysis and how to do this by just following me and doing reps alongside, follow me on Twitter, the iChart Daily. If you're part of any groups and you're tired of dealing with nonsense and just want to look at charts and understand price action based off of visuals that work 80-90% of the time, compared to being told news and then fooled time and time and time and time again, follow me, cuzzy. Let them know. Share the knowledge. Any comments, questions, concerns, leave it in the comment section. Besides that, once again, alert here, we could trickle up. But once again, I trust charts over people, and longer time frames, especially this one, doesn't look too great, especially with the gap there. Enjoy.